following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday at 877-927-6648. Thank you to our wonderful hosts earlier on. Let's keep up that great standard. Dow's down 89, Dow's down 90 at 20,572. S&P's down 13 at 2346. You can see the 2-minute chart here gave a peak D, topped at about 935, 30 or something around there, 940 this morning. And we've plummeted from that 2360 area down to where we are right now, 2344, down 14 points. But this is not the issue. The issue is that within the Chapman wave methodology and the new techniques that I've developed, there was a Chapman wave peak D and a Chapman wave 5 in the 120-minute chart at 2366.77. Double top was formed, and now we've come down sharply, taken out all the support levels. That's a 120-minute chart. If you're looking at Tiger TV, I'm going to move it away down here in the corner, right there. And what we're looking at this point is we're looking at a Chapman wave 5 and a peak D in the daily. We're on our way, I believe, to Chapman wave 5 to the downside, which should take out 2317.75. That left side low that was made on the 27th of March went up to a peak B. That should become a peak B minus. But the reason why I became so negative over the last couple of days is there's a Chapman wave 5 that has formed in the weekly chart, which is also a peak D. Remember, my Chapman wave 5 has nothing to do with Elliott wave because I found over the I'd have to say thousands of charts that I analyzed based on my knowledge of Elliott wave, that there are too many ifs and ands or buts or what ifs. I just couldn't do it. So I developed a different technique, and this technique says that don't expect wave 1, which pulls back, to always find that wave 3 is going to be at least what wave 1 was. That's the first rule that was broken. And secondly, there are times now where I get a 5 of 5 in the expansion from wave 3 with a 4 down going to 5 to the upside using the Chapman wave methodology of the alphabet, A, B, C, D, those peaks, E, Fs, etc. And that helps me to define, for instance, right here within the weekly chart of the E-mini, there's a 5 within it. So it's a 5 of 5. And that really helps. Now let me explain what is going on here. If I look at the QQQ series, I spoke to Tom the other day and I said, I believe that this breakout above 132.43 in the QQQs, that was the high of the 21st of March, pulled back quite sharply. That should actually have been a trigger for a sell mode to continue because the MACD was very poor, the stochastic was very poor. Then you had that rebound, and the rebound was really just a handful of NASDAQ 100 top stocks that took you to this leg E. But every bit of analysis had a peak E in the E or an F in the 120-minute chart. And everything about it said that there should be some kind of a pullback. And that's all I can say right now about the QQQ series, some kind of a pullback. The fact that today, 132.74 was the high of Friday, and today's high is 132.81, a real trap by getting people sucked in right at the top because it looked like, oh man, you could short as many times as you want, but you were wrong. And then all of a sudden, when you say, I'm throw up your hands and say, yeah, that's it, I'm done. That's why I try to avoid shorting the QQQ series. We short down the S&P via other vehicles. But look at this. There's a chance now that the Qs are making some kind of a top. To get that confirmation, you really need to see the semiconductor index, SMH, the ETF, which went to a G, an unusual G, on Friday to 80.05, And look how many tests, 1, 2, 3, 4, 5 tests we've had so far of the very high 79 to the 80 level. And yet the MACD and stochastic are pulling back. I don't like that. I think that that's a negative. However, I'm not going to fight with the weekly chart, the 79.99, 80.05, and now we've got 79.95. So I'm not going to fight with this until I really feel comfortable saying that the technicals in the weekly chart are starting to deteriorate. At this particular point, I can only say there's a hint. That hint has to be based on the rudder, which is the 120, which is pulling back quite sharply, the SMHs. And at 79.29, down 42 cents, that is just not a big deal. In fact, we could even form a rectangle formation by holding to 77.80, the low that was made in the 21st. You could even go a tad lower and then just go sideways. I actually think that that's not going to happen. I've got everything I'm looking at here suggests that there is going to be a deeper consolidation unless we get one of those spectacular rotational corrections. We've had it already. Let me show you why we've had it already. SPX.X, look at the S&P. Since the March 1st speech high at 2,400, oh, I didn't put the points in, 2,400.98, but it was 2,400, nice round number there. Pullback, we've had time, not so much price. But look at the weekly chart. The MACD is just starting to turn down. The stochastic's now under 80%. I'm suggesting to you that this is going to be a deeper in time and price correction, unless something, as I say, spectacular happens. All of a sudden, those NASDAQ 5 or NASDAQ 8 just keep the market astoundingly higher. I don't think it can do that right now. I think we're looking at time and some price. That's really what I'm saying. Look at the IWM. IWM, what a sharp move. It's down 1%, 1.07, down 148 and 136 round number. This is a single leg 8 at least at this point. It is a peak C, and we've got a few peak Cs, mostly peak Ds in the weekly chart, even a leg E in the QQQ series. I suspect that this is telling us that there will be some pretty good support coming in a little later on, and a little later on in the month, and that we will then go to a D and even an E and an F in the monthly charts. But at this particular point, there is just a very strong example of, for the first time, what I'd say to subscribers is that I think the Rip Van Winkle volatility index is finally making higher lows. I don't know about the higher highs yet, but at 13.44 in the 13s, that is selling pressure. And that selling pressure is going to be, you have to wait 5 sessions until Friday to see if it's sustainable. And at this particular point, it's a spectacular move going from 11 to 13.44 in just a couple of days. But we've done this before and then failed. I think this time it's a little more serious. All right, let's go to gold. GC. The gold contract is up nicely here. It's up 3 at 12.54. Let me just double check to see. I might not be current. Yeah, or $3. It's about $3 at 12.54. Nice reversal. Gold is held very well above the 200-period exponential moving average, but that GDX really needs to move sharply. And yep, it's a nice move today. It's making this oval pattern. This oval pattern is going to be a really key ingredient for the next few days, because if at 23.15 up 34 cents, GDX spikes higher, we'll talk about that.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new market-safe core commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you can potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, Basil Chapman, Tiger Technicians Hour. Let's just do this here, a couple of little technical things, and we're going to go straight to Scott in Safety Harbor. Scott, how are you?
Long time no talk, Basil. I've been great. I've been utilizing my personal ATM, which is CX.
Good.
And just want to see what you are looking at in the future. Also, I've been doing a lot with NVIDIA, and NVIDIA has been very active.
Good. Okay, so we're looking
at CX today.
CX, which is CMEX SA. This is a Mexican cement company trading at $9.01, down 6 cents. So I don't think that you should change the strategy, because until it really breaks out and can hold above the high that was made on the 20th at 925, I wouldn't be surprised if it's going to just chop around here. On a purely technical basis, it keeps making the arch formation. But here's the thing that I'm starting to look at. That is the one sign that says, if it can get into the 920s, actually, if it can get into the 940s, that's really what you want to see. Now, I'm not sure if you can actually see my chart at this particular point, but I'm drawing a cup formation. And what's really important about this cup formation, I'm going to also take this trend line right here. I'm going to raise it a little bit. I like to be as conservative as possible. I should take it to the outer edge, which would take it to breakout above 917, but I'm actually going to make it a little bit more conservative, make it lower to the body of the candles. So if at any point in the next 2 days you see CX trading in the 916 area, 916 to 970, 916 to 917, I think you can buy it as a potential breakout, and that should take it above 925. My one concern here is based on the 120-minute chart. I think that the chop that we're seeing says that it's probably going to pull back to the 892, maybe even the 880 area, and that's going to be key. Now, you could keep your modus operandi of buying these dips, but in this case, I would be even quicker to take profits, because if it pulls back that far, the way it's had this consolidation between essentially 869 and $9.02, that's its most. That's this area that has the most number of candles. The full body of the candle is within that range, that says to me that it better hold 880, because if it pulls back under it, it might take one little dive underneath $8.67. So all I'm going to say is the modus operandi of buying and just taking the rally and then getting out, I think is going to work for you even more. But
yeah, we're at about 14 times now of the $8.70 to the $9 range.
That's what I'm saying. You see, that's exactly my point. That's that range
the
that it
keeps getting lower. That's what's concerning me. There's money seems to be coming out of the stock.
So here's the reason why I'm making such a big deal about this arch formation. It's had so many times. I have a left side, right side price time match would have gone to Friday or even to today, and it's actually not even gone above the 920.25 level. So I'm just going to say to you, have a little patience, because at some point, if it does start to trade in the 940s, that'll produce a really bullish cup formation and say, hey, next time we're going to be going straight to 951, the high of the 25th of March. But until then, be careful, because it keeps, I'll draw it in again and you'll see exactly. I love it when patterns repeat, because it means that until the pattern stops repeating, that's what you want to follow. And this is what I'm looking at. And it says probably in time and price as well by Monday today. By Wednesday, if it is underneath Friday's candle of $8.84, you've got to be real careful, at least for another couple of days. Meantime,
Basil, I follow the news as well, and it just seems a little concerning to me with their statement about not wanting to participate in the wall and, construction. And I don't want to paint everybody with the same brush, but a lot of those guys, the blue-collar owners of these companies and management, were for Trump and for the wall. So they have the right to use any cement company they want to. And when, CX's trucks are all over their job site and they're known for not wanting to participate in the wall, right, that's not a good thing.
So now, so this is the reason. One of the reasons why I've become negative on the market in the short to maybe intermediate term, not long term, but just I'm talking about weeks going into maybe a month and a half. We've already had, about a month or so, is that I like to look at things, as you often do, I like to look at things politically as well as technically. And in my political analysis, which is back of my mind, it's nothing written down, but my back of the mind analysis says that Trump is bumping into a lot of resistance and there's a lot of stuff that he's got to accomplish. My contention has been for decades that presidents are really only good at one, maybe two aspects throughout their presidency, because it takes so much effort. We're talking super tankers. You can't turn these things on a dime, and it's usually the president before that does a lot of the work for the next president, good or bad. And he's just trying to accomplish too many things. And that says to me, that fits in with my consolidation phase that we're in. But you see, I want to relate it to CX. They have an obligation, probably they have an obligation to Mexico, but they have a financial obligation that they would like to benefit as much as they can from whatever they can. And that puts them in a difficult position. And that's what you're seeing in the chart, the sideways choppy action that we've seen since, about February, was it? Let me just see the weekly chart. From the high that was made January the 27th at 9:51, says, I'm not breaking down, but I'm not breaking out. And that's the reason why I've said keep up
Basil,
the choppiness.
that was a fantastic analogy that you just made about the presidency. It's like turning around a super tanker or an aircraft carrier. It can be done, but you can't turn it on a dime. It's a broad turn. So that was a great analogy.
I grew up as a preteen back in Cape Town, South Africa. From my bedroom window, I used to be able to see out to Robben Island. That's where it wasn't at the time when Mandela was imprisoned there. It was just nobody actually went there. They used to have a race from Robben Island to Sea Point, that's a suburb of Cape Town, for a swimming race. And the guys used to put the oil on their body and swim there and back. It was freezing water anyway. So I used to watch the boats. And the sharks. And I used to watch, well, it's cold, but there are sharks. And I used to watch the boats. I used to watch these tankers and whatever it is. And I used to always marvel that if you didn't look for a few minutes, And then you looked again, it looked as if the boat hadn't really moved, the big ones. And then if you looked maybe half an hour later, all of a sudden you'd see it. And that's what you've got to think of, both the economy, the stock market, presidencies, and anything that is mega in size, because it takes a long time for you to turn the corner. It just doesn't happen on a dime. And that's really what I'm looking at. And I think that's what we're looking at CX. I would not be surprised later on if the compromise has that CX actually does work and it gets sanctioned from the Mexican government. Let's see what happens later on. Right now, it's made a peak D in the monthly chart. And that, you remember I said to you, arching over. I just wouldn't be surprised if it's going to be chop, 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 slightly lower highs and slightly lower lows for a little while longer.
Thank you very much, Basil. And the owner of CX needs to do what my uncle used to do. He owned a car dealership. He said, never get mad at somebody, get even. So
Okay,
CX
we'll
needs to start making some money off Trump and forget about the politics, right?
I agree. Very good. Thank you, Scott. Speak to you soon. We'll be back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi folks, just an update here, a couple of updates I want to do. This is minus 12 on the E-mini, and there's that sharp move down. Now we should have a little bit of a bounce because the stochastic's so low, and the MACD's trying to have the histogram turn a little bit higher, but it's a very negative chart for right now. But I think we could bounce to the 2347.50. We could go to 2350.50, and maybe an arch a little later on, and then see some weakness into the close. And what I said to subscribers, that we have not yet seen double-digit moves in the E-mini before the market, intraday rallies with lower highs and lower lows, closing at the end of the day down with a double-digit E-mini and a triple-digit Dow. Not yet, anyway. We're getting close. Now, there are a couple of things I wanted to do here. Just real quickly, I never finished the TLT. So let me show you something here. Oh, I'll do it here. So this is the TLT. You remember? Oh, I forgot to show my subscribers this over the weekend. Well, we looked at it on Friday, I think, Thursday or Friday. You see that peak F there? And that's usually with a failed right arm extension in the Chapman wave methodology. So right here, you get your best MACD and stochastic. And right here, you get a fading MACD and stochastic with a slightly higher high. So we've gone to a peak F in the 30-year T-bond yield, the white TYX. The TNX is the gold brown color here. That is the 10-year T-note yield. Now, this is the 5-year T-note yield. And you can see they're all failing. And what I'd said, I think that we're going to be in a rectangle formation, maybe slightly lower lows, slightly lower highs, but I don't know yet if we're going to break down. But that also depends on the TLT. So let me just put this into context here. So just show you, I usually show this. This is a South African chart of gold. We've gone to a C in the monthly already, and then it's pulled back. It's looking more like it wants to arch over a little bit longer, and then it should move higher. But so far, it's actually not a bearish chart. It's more a bullish. This is a South African Dow Jones South African Stock Index. And this does have some gold stocks, but mostly is the industrials, I believe. I haven't checked it for a long time, but that's the chart I wanted to look at. And right here is the chart. If I can get this away, you'll see that right behind it, we're looking at peak D in the Wood IW. WOOD is the iShares Global Timber and Forestry ETF, but it hasn't broken down at 57.28 with the recent high 2 weeks ago, peak D at 58.33. You really need to see this going quite sharply below the 56.63 low of last week. And then I'm going to say that's a peak D. Right now, I'm saying it's a peak D, but not a peak D signal of any sorts in the weekly chart. And here's a peak F/C in the HGX weekly chart. That is the Philadelphia Housing Sector Index. And you can see it's the same sort of thing. Had a good candle last week, but not good enough to go to a new high. And this week's going to be really important. What happens this week? My suspicion is that yields are going to be in effect as an overhang over the market, but the reality is that the yields have actually come down somewhat. And now let's go to the TLT. Let me show you what I wanted to look at right now. The TLT needs to make leg D above 122. Was it 120? I think it was 0.2 away. Yeah, 121.97. It is 121.98, and right now the high is 121.87, and it's trading at 121.61, up 90 cents in the Lehman 20-year T-bond fund. And that's right here. So we've got a new buy mode. We've had it for a while in the TLT. And that says that the arch formation is a successful one. The fact that it didn't close below the low that was made at 116.80 the week of the 16th of December says that there could be a rally to the next most important resistance level. That was 120.35, 9-period moving average. If it takes it out, look for the next left side peak, or the 120 or the 200-period exponential moving average. Well, they're both at the same level, so let's just call it 122.14. If that's taken out, you could even rally to 123.14. But my big deal here is not that yields could go higher or lower. My thing here is that if the TLT starts to accelerate to the upside, money is going to come out of equities and go into the bonds, the safety, so-called safety of bonds. That's my thinking. That's the reason why I've been wanting to add to the short side. Speaking of O'Reilly, Basil, check out O'Reilly. I don't know how O'Reilly got in there, but yeah, I know. Don't tell me. I looked at it. I took it off the list on Friday or last week because we have a short. Not very, very high price, but a higher price short. I thought, you know what? There are other things we're looking at. I know that this Orly is going to turn around. O'Reilly Automotive. Lo and behold, I don't know where the earnings came out. I wish I had looked to see if earnings were coming out, because if they were coming out, absolutely I would have shorted on Friday. I would have had subscribers shorted in the 270 area. It's trading at 254, down 15.46. Yep, I've been talking about it. I showed the peak F top in the monthly chart. It's made a hat-trick top. It is in trouble. It is not coming back to the all-time high of 292.84 for a long time. This is auto parts. People are buying new cars. They're not putting money. And if you look over the weekend, not the New York Times, it was the Wall Street Journal. I think it was the Wall Street Journal had an article to say that secondhand prices, used cars, the prices for used cars has dramatically fallen. Isn't that interesting, huh? Okay, enough with that. Let's get back to our story. So here's a question. I was asked about MPVD. Never heard of it? MPVD. And that is, this is called Mountain Province Diamonds. And it's trading at $3.40, down 15 cents. And the question was, what should one do if one had bought it? Diamond mines. Now, we've had a lot of diamonds have been out of style for a long time. There has been, I don't know what the effect of the Russian diamond, those fake diamonds, I can't remember what they're called, but they make an unbelievable diamond. It just shook up the market about a decade ago. And then I think diamonds started coming back because they were able to really tell which are the fake and which aren't. But I said to myself, you know, I'm originally from South Africa. I knew a lot of people who worked on the diamond mines. I mean, whose families had worked on the diamond mines, etc. Maybe not a lot, but I knew some. Knew people, and quite a lot of people who grew up near the diamond mines. I didn't. I was near the gold mines. But I can tell you this, that Diamonds Are a Girl's Best Friend was a great movie, but I'm not sure that maybe it comes back as a fashion, and because it's used it's so strong, it's used in the industrial world. I think that's the only use. I don't see it as a commodity that's in demand. I see it maybe as being a usage factor, and that's just a commodity per se. So I'm just going to say, looking at this, still have De Beers monopoly. Yeah, De Beers monopoly, and they got shaken up by that whole Russian deal. So I'm looking at this. I have a funny story about one of the diamond guys, but maybe for another day. So MPVD trading at $3.40. So the question is what to do. I'm going to make the suggestion that if you personally feel, the person who asked the question, that you're a little overweight, that you're not comfortable sleeping at night because you just got just a little too much money tied in there and you bought it recently, I would just take some of it off. I'd actually take off half, and I'll explain why when I get back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks, we're back. Dow's down 86, S&P's down 12. Now, what we're looking at, you see the E-mini, you see this little cluster formation here. It's kind of used up its time. It better move real quickly. It better go from 23.47 to the 23.49.50 level real quickly. Otherwise, it's just showing selling pressure has begun. Selling pressure has actually been there all the time. It's just a handful of stocks that have been keeping the market up. So, back to MPVD, which is, as I said before, this is Mountain Province Diamonds. I'm just going to say, take some off. I don't think that it's worth the risk. We're making lower lows, lower highs in the monthly chart. Look at this. The weekly chart has made the arch formation. Hasn't broken down yet, but the way it's looking, it really does look like it wants to retest the low of last week, which is at $3.05. If it takes that out, watch out. This is going down to $2.50. It better start to rally and rally real soon because it needs to get to the 352, 350, 360 area just to find a little bit of comfort. So just be careful. Now, if you want to treat this as an option, an unexpiring option, I shouldn't say that because it could go bankrupt, but at least as an option without a monthly expiration date, what I would do is this: I'd still take just a little bit off here and I'd keep maybe the call. And I think, you know what, if it does show strength and it can get to 364 and hold there for a full day, you can put that money back. Yep, you've lost 20 cents, a big percentage, but you have the chance of making a V-shaped formation to try to get back to the 390s. That's the only way I'd look at it. And I'd treat it only as I would not treat it as a long-term buy and hold unless you can just tuck it away and say, I'm not even looking at it until August or September. And then you just look at it and say, oh, isn't that nice? Trading at $4.75. Or, oops, that was a mistake. It's trading at $1.45. So just, it's not a good pattern. I'm not happy. I don't like the action. If it was holding at Friday's high, I'd say, you know what? Put your stop in at about 338 or something like that. You could still do that. You could have a stop at 338 in the short term. But I'm just saying to you, I don't, unless you're looking at it as a buy and hold and put it in a drawer, but the fact that you even asked about it says it's on your mind in the forefront, not the background, be careful. That's what I'm saying. Now, I need to do a couple of things here. I had some really good questions, but I haven't quite finished. Look at the dollar. The dollar right now is higher. It's at 100.66.31. Let me just double. Am I correct? Yep. It's doing quite nicely. And it's in leg A. This A, you should have a little bit of a breather at some point. The MACD has finally turned positive and the histogram's positive. Stochastic's still only at 46%. But it is the weekly chart that is impressing me at this particular point because The MACD is flattened out, and the dollar monthly chart is just says, hey, this is a consolidation after a spectacular move. So what I'm looking at here is that the dollar is actually, I don't want to use the term strong in the daily, but it's stronger than the rebound in gold. No. I can't, let me find the words for it because, I know what I wanted to say. I wanted to say that that gold, that's gold itself, not the miners, the gold miners, but gold itself has this time held extremely well, especially since it made the V-shaped formation, but it never took out the high of 1,268.1 made on the 27th of February on that V-shaped move on the 27th of March. It went to 1.264 and 1.268. So it missed it. But the consolidation has been quite good. That's really what I want to say, is that the leg, this is the leg I was talking about, stopping at a peak D. The stochastic's still at 82% good, and the MACD is okay. So the action of gold, now let's go to the GDX. I could do the XAU, but let's go to the GDX. This is the pattern that I said I'd come back to. You see this pattern, what I would like to do is say, yep, maybe we can be looking at a stalk leg formation, but the leg up, I really like it to be after multiple moves to the upside, but really looking like a straight line. And this is not quite that. So I'm just going to say, I'm going to circle this. And I'm just going to say GDX is up 31 cents, up $1.34%. That I think is good action. But what's really important is that peak A, B, let's still be at 23.56, and this was 44. No, I mean 54. Yeah, 54. So this is going to be leg C if we can get above 23.56. And then I'm going to say, now I'm impressed because GDX and the and gold, the contract, are kind of in sync. And that's going to be very important. That's really what I wanted to say. Sorry. Now, the other thing is that within the context of the weekly chart, look, keep your eye on this middle chart, daily, weekly, monthly. Look at the monthly. There's no real strength in the monthly chart of the GDX. Look at the weekly chart. No real strength in the GDX weekly chart. I could even make that a little bit longer. Keep your eye on the middle chart. Look at gold. You see that? This is much more positive. The problem I've had with the daily chart of the V-shaped pattern in one move didn't go all the way to the upside to make a left side, right side price time match. In the weekly chart, that is far more positive. It looks like it really wants to get to a leg C maybe this week. So how do gold stocks act if gold? Well, I believe that if gold actually does move above the high that was made on the 27th of March, 1.264, 1,264, that's going to be good action. And then the 1,270 200 period simple moving average, the blue line up there, becomes the target. So far, good action. That's all I wanted to say. Good action. And the GDX is nice. It's not great. It's just nice. It needs a little more. All right? So let's go back again. Dollar acting very well. I would prefer that it had a peak A and it was now in leg B. I want that B because it's going to give you consistency and saying, yep, the up move this so far has the look of a single leg A. So watching it closely. So if we go to the EUR-USD, that's the euro-dollar currency pair, you'll see peak F and a sharp pullback. Weekly chart, not very good. If you look at the USD-JPY, that should be a little bit, oh, look at that. And that's making an arch formation, a lowercase h. So both of them are acting quite poorly. Wow. That says to me that there's a lot of action going on. Gold and the dollar might do well together. That's going to be an unusual thing. It happens 4 or 5 weeks out of every year, maybe twice over the year it does that, where they go in lockstep, trend-wise, not in price-wise, trend-wise rather than in counterpoint. I'm watching this closely. The currencies are pulling back. That says the dollar has a little more strength to it. How does gold hold? I'm just looking at this and saying, I really believe that this market is going to be pulling back. I think we're going to get a surprise, triple-digit down move to the downside is, oh, look at this. We've started leg C to the downside in the 10-minute chart of the E-mini, down 16 now. So, yep, I feel really, oh, that's what I want to do. So let me do this. We've got a break coming up. So Julie wants to look at XOM. XOM is right now, XOM is down sharply, down 61 cents. I think I need to talk about that in the next, in the final segment, but I also want you to show you why, based on the Chapman Wave methodology, why I was looking for lower prices. I'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Okay, so let's just do this. So we're looking at the Dow. We made a Chapman Wave 5 in the 120-minute chart way back there at 13:30. That's 1:30 on the afternoon of the 17th of March. Plummeted down in a Chapman Wave 5 to the low right there at 11:30 on the 27th. Now we've gone a very quick 1, 2, 3, 4, 5 to the upside. Peak C minus, I'm calling it in the Chapman Wave methodology, but a 5. And that's the reason why we had confidence, because we wanted to add to the short side because of the arch formation. This is the 120-minute chart. This is the 120-minute chart with the technicals. You see the MACD's gone negative. Stochastics plummeted down to 34%. The daily chart is, look at this. We had a 5 in the daily chart on the 1st of March at 21,169. We had a 3 at 20,412. And that's trough C back on the 27th. ran up to a peak A and then a B, and it looks like it's going to be a B minus. And I've called that Chapman wave 4, and now we're coming down sharply. I think it's going to go below 20,412. And look at the technicals. I said that there's going to be a deep MACD's fast-moving average is flattening over there, and I wrote in stochastic rebounded with the unbalanced volume, and then oh no, sorry, this is the wrong data. I had a power outage, so this is not accurate. This is for the analysis I just gave you is for today, but what's written down is still from last week. So there's the arch formation. I said the MACD could pull back, and then the stochastics acting quite poorly. It's only at 45%, I think it was. So that's that. Now, what we're looking at, and this is really important, is a question here about, let's go through them. GT wants to know about the TF. Let's just go to the TNX right now. That's the 10-year. Look, trough peak D. This is trough A, B. This is leg C to the downside. This is the weekly chart that I was talking about with that chop at peak F. It's just kind of stuck right now. Oh, 26.21, 26.21, and it's failed. So this is what I'm looking at, that yields are coming down because there's the safety of bonds is kicking in right now. Next thing, Bob wants to know about Goldman Sachs. Let's just do that quickly. Goldman Sachs, I think it's going lower. Yep, there's the arch formation. Don't touch it. If you want to short, you can short, but put in a 5-point stop. Sarah wants to know about UTX. UTX is right here. Same pattern all over the show. Peak E in the weekly, peak E in the daily. I think that UTX is going to pull back and test the low that was made on the 27th of March at 110.45. There's a good chance it goes to under 110 in this move right now. It's at 111.48. Next question is, Judy wants to know about Exxon. You see, I'm a little nervous here about these oil integrations. That's why I was saying I'm not sure yet. I'm waiting to see what Telephone does, waiting to see what Exxon does. This is all I can say is that for dividend right now, we're trying to play it in a completely different way. So I would avoid the dividend stocks that you're looking at, but I would not avoid dividends. So next thing, Sean, nice comment, good comment. CX, they don't want trucks on job site, but they will sell to other cement companies involved in the project. Really good point. I sort of thought of something along those lines, but you've articulated beautifully, Sean. Thank you. Old Gringo wants to know, what if Trump's wall only uses USA-based cement? Yeah, so that's Sean's answer is to, you sell them to someone else under a different name. I guess. I mean, I'm just thinking out loud here. We'll see. All right. So we're about to wrap up. Let me just do a couple of things here. The volatility index, you remember I said Rip Van Winkle is waking up. Look where it is. It almost touched 13.58, the 200 period daily exponential moving average. It's alive and well. If suddenly there's just a reversal sometime, some at 1333, if it closes under 1290, I'd say, it's remarkable. We might have a rotational correction. And the VIX weekly, well, we don't have to talk about that. It's just start of the week. Hey, have a wonderful week, everybody. Have a wonderful day, everybody. I'll be back tomorrow. I'm trying to resolve a whole bunch of technical problems. You can see my mind is a little bit discombobulated. I'll be back tomorrow. Have a great day. Check out my opening call.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.